It's happening. It's happening. The acceleration of the IPP agenda, the massive privatization of infrastructure as governments around the world, but particularly in Africa, are pressured to pay debts and sell off their assets. Key assets being energy assets. Yesterday, something major happened. Let's watch.
We believe infrastructure is only at the beginning of a real major asset class. There are some structural demands that are going to increase the issuance of more and more infrastructure. I've said for all along, and Bloomberg has been talking about that for a number of years, that deficits matter. It's going to be harder and harder for countries to continue to deficit finance. And at the same time, there's a giant need to rebuild and build out infrastructure, whether it is the digital infrastructure as we are all trying to become more engaged with AI and other forms. We have a decarbonization process. More and more countries are more interested than ever before in energy independence. And one of the ways in countries that do not have available hydrocarbons, they're going to be doing it through wind and solar, maybe other forms of decarbonization. We have corporations now that are using partial infrastructure sales as a mechanism to finance their future growth. And then from the demand side, what can be better for retirement investors than long duration assets with a high coupon that is inflation protected? So you think about, our clients, 65% of our clients are retirement assets. And when you think about BlackRock and the roles we play with many governments, our continuous ownership in stock and bonds of every major corporation in the world, more and more companies are coming to us. And over the last few years, we did build up a very large and really successful infrastructure team. But I've always looked with envy, with admiration to what Bio and his team have done. When you think about GIP, what are they known for? They invest in major and larger projects than we did in infrastructure, like Gatwick Airport and Sydney Airport. If you think about what we have brought at BlackRock over the last 8 years in infrastructure, what GIP has been doing since 2006, the two organizations look like a perfect match. And I'm confident we are in the early part of this infrastructure revolution. And we wanted to have the scale. We wanted to have the expertise, the operational expertise of GIP, marrying that expertise with BlackRock's global relationships with companies and governments, marrying our existing expertise in decarbonization and infrastructure. It's a perfect partnership.
BlackRock is the most powerful asset management company in the world, and they have just struck a deal to buy global infrastructure partners for more than 12.5 billion US dollars in cash and in stock. Acquiring GIP, which has 106 billion in assets under management, would make BlackRock the second largest manager of private infrastructure assets in the world. That's what's happening. And if you unpack his statements, just to give you the highlights, he said governments which are in deficits are not going to be allowed to really explore the opportunities of infrastructure ownership. And what he's suggesting is that we're going to force these governments to focus on the deficit. And if you think about countries like South Africa, you've heard the Minister of Finance say that the deficit is going up. We have to make those payments. We can't print more money, etc., etc. So that's what they're saying. They're saying governments have a deficit. They won't be able to afford infrastructure. The world is going through a decarbonization, which is being pioneered and pushed by the World Economic Forum and also by the company BlackRock. And he said that the focus is going to be on wind and solar, not nuclear, wind and solar. And that his company has relationships with governments. It has relationships with other companies. What he means is that they own a lot of the other companies' shares, and as such, they have direct access to those companies, those CEOs. So you may not know BlackRock, and I may be going ahead of myself. So let's break it down. Who is BlackRock? BlackRock is an investment firm. It's an asset management company, and it controls large amounts of shares in some of the world's largest companies in the world. In fact, it controls $10 trillion in assets around the world. 10 trillion. That's over 200 trillion rands. That's how much it controls. The CEO of BlackRock, Larry Fink, who's been speaking here, he sits in very powerful positions in the world. He sits on the Council of Foreign Relations, and also he sits on the World Economic Forum Board of Trustees. The Board of Trustees serves as the guardian of the World Economic Forum's mission and values. You want to know who also sits on the World Economic Forum board? Patrice Motsepe. And in fact, the World Economic Forum has got strategic partners that are listed on their website. Guess who are the two strategic partners listed quite early in their website? BlackRock and African Rainbow Minerals. So Larry Fink, Patrice Motsepe sit on the board of the World Economic Forum, and their companies are strategic partners. Another interesting strategic partner of the World Economic Forum is Glencore. If you remember well, Glencore paid fines of close to $2 billion because of their conduct in Africa, where they were manipulating markets in Africa and bribing African politicians. So just interesting people who sit on the board. BlackRock has been the company that has been pushing for ESG, environmental, social, corporate governance. They've been pushing for that. And they've also been making sure that there's a push for the just energy transition. In fact, these things became more prominent and popular after the drive of BlackRock in securing them. Let's get more insight into the nature of BlackRock and the kind of powers that this company has around the world.
Today, BlackRock is the largest of the three investment firms, managing nearly $10 trillion in assets, followed by Vanguard at roughly $8 trillion and State Street at $4 trillion. Technically, these assets do belong to investors, the clients of BlackRock, but effectively speaking, BlackRock manages or owns all of these shares. So what happens when the shares of supposedly competing firms are owned by the same few investment firms? Well, it effectively creates what Harvard Business Review calls, quote, a different form of monopoly, which they say harms competition, consumers, and the economy. Just imagine two ice cream carts next to each other with different owners. They would either need to lower their price or enhance their offerings to compete for your business. But if both carts had the same owners, they would not be incentivized to cut price because that would only result in a lower total profit for their investors. This kind of dynamic plays out every day in companies across all industries in the real world. Take supermarkets, for example. Who are the largest shareholders of Walmart, America's largest supermarket chain? BlackRock and Vanguard. Kroger's, also BlackRock and Vanguard. What about Target? You guessed it, BlackRock and Vanguard. And what's happened to food prices? We've all felt it. It's gone up, up, and away. This same pattern of ownership repeats across every major industry. So what we think of as the most powerful companies in the world, companies like Apple, Microsoft, Amazon, the executives at these firms still have to consult with companies like BlackRock, Vanguard, and State Street before they make any major decisions, since they have such a large share of their ownership. So the point almost isn't the fact that they own every company, it's how such a structure of concentrated institutional ownership impacts the quality of life for ordinary people.
And this is what they had to say about the access that BlackRock has to governments. Just listen to this.
Major political parties, specifically targeting the House Financial Services Committee, the folks who could potentially cause BlackRock headaches, and of course, employing an army of professional lobbyists. Just how high up in the US government have they been able to penetrate? Well, currently there are 3 BlackRock veterans with appointed positions in the Biden cabinet. Brian Deese, the former global head of sustainable investing at BlackRock, is Biden's chief economic director. Michael Pyle, BlackRock's former global chief investment strategist, is Kamala Harris's chief economic advisor. Let me tell you, those 2 positions do not require Senate confirmation, and they are actually the first duo of the modern era to go from the same Wall Street investment firm to jobs as top economic advisors to the president and the vice president of the United States at the same time. Wally Adeyemo, the former chief of staff to BlackRock CEO Larry Fink, he is now the current deputy treasury secretary. And let's not forget, Larry Fink, the chairman and CEO of BlackRock, is a member on the board of trustees of the World Economic Forum.
Let me tell you, it's not that who's the president. It's who's controlling the wallet. So it's
And who's that?
the hedge funds, BlackRock, the banks. These guys run.
This is conjecture, but it cannot be a coincidence which firm of all firms was tapped to lead the investment to rebuild Ukraine. You guessed it, Larry Fink and BlackRock. Another data point, in 2021, BlackRock became the first global asset manager licensed to start a wholly owned onshore mutual fund business in China.
Wow. And I want you to listen to what this guy says is his philosophy in achieving what he wants to get. He has a specific philosophy about how he achieves change.
You have to force behaviors, and at BlackRock we are forcing behaviors. What we are doing internally is if you don't achieve these levels of impact, your compensation could be impacted, okay?
We're doing the same thing.
And so it's just, you have to force behaviors. And if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted. And
Let's open it up to questions. Brent is in the middle here. Let's get him a microphone if we could.
We agree. How do you force change, though? I mean, Larry, BlackRock has really been in the forefront of the ESG movement within corporate governance and a real leader, and yet change is so slow. So what is, and Ken as well, how do you force change when it is so incremental and so gradual? How do you do something more radical? Have you thought about that? Has the board of American Express thought about more radical things we could do?
I could speak about BlackRock's board, but it doesn't come from the board. It comes from it really has to come from the leadership of the firms. And if the leaderships of the firms are not doing the changes, hopefully the board forces that change. And if not, it's going to be the shareholders.
Now that you understand what BlackRock is, it's important to have an understanding of how many assets in the energy sector are controlled by GIP. And if you just look at this graphic, you'll be able to see just how much they control. And it's quite a lot. And this acquisition is going to enable BlackRock to become a bigger player in the emerging energy markets all around the world. And actually just in the wind and solar markets, which are the ones getting the preferred bidder status for IPPs, even in South Africa. And African Rainbow Minerals and Energy is one of the largest beneficiaries because it's part of the ICAMVA consortium, which has won a significant amount of those particular tenders. So that's where things are going. And why should it matter? I think we need to ask ourselves a serious question. Should infrastructure be owned by the shareholders of investment funds? Some of those shareholders are pension funds, but a lot of those shareholders are part of the global elite. They're part of the global superstructure right now, which exists. People who are in America, in Europe, etc. Should African roads, African electricity companies be owned by overseas interests in this manner? What risks exist when all of your assets are now owned by a global elite that is not accountable to you and only speaks to each other through shareholder meetings of entities such as BlackRock? The other side of the equation is what happens when 3 or 4 companies have monopoly control or a new form of monopoly control, as alluded to by Harvard Business School, over the financial markets, over particular companies, or elite influence? The prices go up whenever you have a monopoly. And the prices of energy have gone up in places where energy has been privatized. Even the quality has deteriorated. For instance, the quality of water in the United Kingdom after they privatized. So in terms of quality, sometimes and not sometimes, it goes down when you have privatization under a monopoly. And when you have an issue of pricing, it goes up. The energy prices in Europe have been very high. The water prices have been very high as well. So these are things that we need to think about when it comes to the developments that are being announced right now around BlackRock and GIP. Asset management firms like BlackRock want to own the infrastructure of countries. That's chilling. And then the final thing that we need to think about is, are these companies now too powerful? To see the level of influence that a company like BlackRock has at various levels of society, something that makes you think. It really does.